Hey everybody, it's Ed, and the future is now. And the future is bull markets versus bear markets, or dips versus bounces. So we're going to go into detail on that, and I'm going to explain, what happened the last couple of days and where I see the market at. I wanted to talk to you guys about the buy the dips, sell the bounce concept. Okay, everybody's, oh, you just want to buy the dip. You want to buy the dip. Buy the dip. No, okay. Got to understand what a dip is. Okay, I talked about this before in the past about um, the dip can turn into a crash. How do you identify the two? Okay, pretty easy. This is Tesla at the all-time high. This is a dip. To the left side, you can see that dip. That would have been a time to buy. Okay, that is a dip. I said it loud. I mean, I was screaming it before. This is a dip. I said this before in a few videos ago, back when this happened. This is a dip. This is not a dip over here. There's a big difference. This is not a dip. The market goes down 2,000 points almost in 2 days. If you think that's a dip, you have to start rethinking what a bull and bear market are, and if you understand the differences. Okay, I said in a video the other day, we could be going into a bear market. Now I'm almost positive. Okay, there's no negative news against Tesla. Tesla did nothing wrong in 2 days, but Tesla is still down huge. But we had a plan. What we did was instead of buying the dip, we sold the bounce. If it's a bear market or potential bear market, which I was guessing that it was, I'm not sure it still is, honestly. Could just be a correction. But I've seen this before, so I'm just making an educated guess. So anyway, when it was down 750 right here. There's the gap down. We didn't really have a choice there. That was intraday trading. I couldn't do anything there. So and then it came down, and I was like, oh boy, okay, this is rough. There's no real room to kind of get out. There's no real positive signs. So the next morning, I was like, okay, look, if it bounces, I'm going to sell the dead cat bounce. The dead cat bounce was not much of a bounce. Okay, you can see it right here, 9:40 a.m. If you look down at 9:30, I was poised, and we sold right at 8:48, 8:49, 8:50. We got all of them out, all of the Tesla shares out, 140 shares out at 8:50, and then it dropped another 50 points. So if you do the math here, and we have 50 points times 140 shares, 7,000. I made 7,000 here, right? Or did I just not lose it? Well, what's the difference? Okay, think about the difference. The whole idea is not to lose money and also not to make, to make money. So we obviously want to make money, but we also don't want to lose it. So we saved 7,000. Okay, that was pretty huge. We went on a day that was, oops, sorry. We went on a day that was negative. What was this? 225. It was down 900 points to a positive 1,200 gain because we bought the shares in lower on. I'm sorry, we sold the shares higher, so there was actually like a 2,000 profit on the Tesla, but we lost on all the other accounts. So we only cleared 1,200 even on that day. How many people, how many investors do you think made money yesterday? Do you think it was less than a percent? Potentially? Less than 1% of all the market, probably. I mean, maybe the traders who were shorting and stuff like that made money, um, but not a whole lot of investors, short or mid or long term investors, made any money yesterday. Anyway, um, and why? Because we had a plan. We had a plan to sell the bounce. I took a guess that we're potentially going to a bear market, that we have more room downward. And it's not because anything that any specific company does. This is an existential threat. The coronavirus does not care what company you own. It does not care your race, doesn't care how much money you have. Okay? You don't have any control over it, and you can't kill it. Sorry about that. That's like wake up and plan. That's what's my wake up and plan the daily event mode for the market. So anyway, I wanted to go over that because I think people I hear so many people saying, "Well, I'm just going to buy the dip here. I'm going to buy this might not be a dip. These might not be dips. There is a difference. I mean, if you want to buy the dips and keep losing money for the next 2 or 3 months, okay, a bear market, just in case people don't understand, usually lasts from 3 months to 9 months, with the average being 6 months. So let's just assume I'm correct. Let's assume it just for a minute. If I am correct and we're starting a bear market, what do you how long will it last? Will it last 3 months? Or will it last 6 months? Or will it last 9 months? To me, I'm thinking it'll be right around the 6 month zone, maybe leaning to 9, like 6 to 8 months. So I'm documenting this so we can have it. This is what I think. And I'm kind of guessing here, but I'm thinking 6 months to 9 months because it's a little delayed. Like we don't know really how it's going to hit all the markets. We're looking, remember the market looks backwards, not forwards. This is all backwards. This is all past. I'm looking at a past history of Tesla, not the future. So the market is always backwards. So we don't know futuristic wise. So on this one. So anyway, let's kind of see what happens. I wanted to talk about that because I think, people have to think about it. Think about it. I mean, if you think I'm right, or if you think that it's going into a bear market, how long do you think this bear market will last? So do you want to rush in the first week and look for dips? Is that the smart play when there could be more downside potentially? I don't want there to be downside. I mean, don't get me wrong. I'm not anti-Tesla, that's for sure. I'm super bullish Tesla, and I'm super bullish the markets in general long term, but this is a short term scenario, and I think to midterm, and we have to consider that this is a possibility, that this bear market may be a bear market. It may not just be a normal correction because of it being existential. Okay? If you go back to 2008-9, it was kind of existential a little bit. I mean, yes, the market caused it, but the market, I would say that the real estate market pulled down all these other markets. The coronavirus can pull down all these other markets. It's not just pulling travel down, it may pull everybody down. As well as, let's say, go back to 2001. Everybody talks about the bubble, but we lost $1 trillion in market share in 2 days in 9/11. When the towers went down, to $1 trillion worth of market cap was history in 2 days. They had to stop trading. They had to close the actual exchanges because of what was happening, because the fear and panic was so insane at that moment. But everybody's, oh, the dot-com bubble, really? What about the 9/11 bubble? I mean, nobody even thinks about that, but that was external. When an existential threat causes damage, it pulls down everything. It doesn't matter how good your stock is, so don't think about it on that way. So I'm not telling you what to do or not to do in your situation. I don't know what stocks you own or what equities or bonds or real estate. I have no idea what your portfolio looks like, and that's up to you. But I'm just saying to be aware of the things that are happening and don't be so overconfident on things. I'm not afraid of the bear market, but I'm not going to be in denial that one exists potentially either. Okay?